Good morning, ladies and gentlemen. So thank you guys all again for tuning in to another pre-market watch list. As always, is appreciative that you guys are here. So if I could get a sound check, let me know things are coming through okay and stream is working just fine and we can get going here. All right, seems like everything's working out properly so far. Good morning, all good, sweet. Here we are. All right, ladies and gentlemen, so welcome back to another trading day. Today will be a day where we are playing earnings plays. There are a lot of earnings stocks to trade today. As you can see by the headline in the video, Dollar Tree, Dollar General, Salesforce, GES, Abercrombie & Fitch. There's a few others that don't look as good to me, but there's quite a lot of earnings plays. You could check out earningswhispers.com. They'll give you kind of an update of all the stocks that are gapping up, or not gapping up, but having earnings today. So again, this should be a pretty good day to trade. Now, I will be on, this will be aiming for my 11th green day in a row. So I'm going to be super ecstatic if I can get another green day under the belt in a row, have this green streak continue. So here's the thing. After so many green streaks, or green days in a row, it does get to your head a little bit because you're thinking, all right, let me just get another green day, when you have to really think that it's just going to be the same as any other trading day. Whether you lost yesterday or won yesterday, it shouldn't affect you going into today. So I will say it does get a little harder. You do get a little, you can kind of feel the butterflies in your stomach a little bit after so many green days. So just going to try and do my thing like I normally do. Try and be patient and wait for the right setups, not gun it too hard, and we'll see how this day pans out. So let's go ahead, flip screens here. All right, ladies and gentlemen, here you guys are. Please take a screenshot of this screen that I'm streaming. These are going to be all the stocks gapping up and down for the day. These are going to show you the stocks that are gapping down, gapping up. They have some float, have some volume there. Primarily just use this to get the ticker symbols, and then there you can use that to analyze stocks and create your own little small watch list yourself of stocks that are gapping up or down. So we'll kind of hang out here for just a few seconds so you guys can do that hopefully. By the way, let me ask, when I go to the screen, do any of you guys take the time to screenshot this or write at least a few down? I would like to know, because then if you do, then it makes sense for me to keep it up. But if you don't, then there's no point of having it. So do let me know here in the chat if you guys do use this screen there. Andrew, we start the live trading room in our private group at 7:30 in the morning, 7:45, just kind of depends on the morning. So we usually start around 7:30 to 7:45, and we run till about 11 o'clock every single day. So we're basically live on that room for about 5 hours a day. Okay, awesome. All right, yeah. So let me say this here. So I know it might be different for some of you guys, but on average, how long do you guys need to be on this page, right? I can tell you personally that usually the first like 5 or 8 stocks are usually the ones you want to look at for the most part. Every once in a while, there's one down the list that's good, but I can tell you right now, it's usually like the first 5 to 10. They're really the ones you're going to want to focus on. So how long do you guys really think you need it here? Maybe a minute or so? 20 seconds to a minute? Nice. All right, cool. So some of you may need it, some of you don't, so that's good to know. So we'll probably hang out here for about a minute or so every day. Do your thing, write them down, screenshot it. All right, sweet. Let's move over. All right, guys, so today we are going to, me, essentially. I'm going to focus a lot of attention on CRM, and then also in the headline of the video, you can see up the very top of the screen, there is also the earning plays of the day that I'll be focusing on, which are Dollar Tree, DG, ANF, CRM, GES, boom. Thank you guys for tuning in. So every once in a while, there might be like a little secondary note up there with some secondary stocks you might want to keep on your watch list that we won't quite yet cover in the stream as well. All right, guys. So here's the deal. First, we're going to cover CRM, then we'll move over to some other stocks. All right. So a lot of you guys know how I like to play the earnings plays. Earnings plays are ones, especially if they're gapping down. I really like earning play gap downs as well as gap ups, but this earning play gap down here on Salesforce, it started in after hours, and obviously now it's pre-market. Ideally, what we're always looking for on these gap downs is, for one, we want to get a good pre-market low. Excuse me. We want to get a good pre-market low that we can kind of determine as a support. Then we also want to have some key levels that it puts in either pre-market or after hours, depending when the earnings call was, right? We want to see good after market or pre-market level resistances so that we can kind of judge where we would like to get in short with an anticipation of it hitting the pre-market low as our first target to cover that short, right? So looking at this earnings play on CRM, let me zoom in. Thank you for the new setup. Yeah, I put a lot of work in on this new setup, so hopefully it's working out all right. So the, excuse me, let me put this full screen. That's what I meant to do. So the earnings play gap up here, or well, sorry, gap down on CRM. As you can see, it's kind of trailing back up. Oh, let me scroll this down. Hold on. I see what I did there. Yeah, let me take that guy. Boom. That's what I wanted to do. All right, so this earnings play gap down. CRM is trickling back up and up and up. You can see I have all these resistance levels marked off, right? All these red dotted lines are just resistance levels going up. All these resistance lines are coming from some of these areas back from when the gap down first started. So the idea here is we are really looking for CRM to come up to any one of these resistance levels, start selling off, and then we'll get in short for it to hopefully come down to the pre-market low. Okay, so ideally, we're trying to get in somewhere on one of these red dotted lines for a rejection signal. And then we're going to open up a short position in anticipation this thing's going to drop. Of course, it's going to bounce, and then it might drop more, and then it'll bounce, and it'll consolidate, then it'll drop more, right? It may not just be what we always wish for, which is that just immediate boom, right? It might, most likely won't do that. But what we do know is that it is heading up towards these resistance areas, and these are where we're going to be looking to get short, all right? So for me personally, just based on this chart, on this 1 minute or 5 minute chart, gives me enough information to plan out what I want to do for CRM, which is I want to see this continuing up, probably get up to 153. That would be nice. 153 would be a good spot. Start getting in short and letting it fall over, you know, for the short position. So again, to recap here, CRM, it's moving up pre-market. This is good. We want it to keep moving up pre-market as it keeps getting closer and closer to stronger resistance. And then if it gets there, we're going to start looking to get in short once we get some type of sell signal or a short signal, and then we'll enter in. And then ideally, the game plan is to have it dump as fast as it can go. But if it moves slow, it moves slow. But either way, we want to see this drop as far as it can go. But ideally, it has potential to hit pre-market lows today. All right. Will it happen all in one swift move right in the morning? We don't know. Is it going to pop up, drop down a couple points, consolidate, bounce, and then fade out for the rest of the day, reaching the pre-market low? Maybe. But ideally, it does have a strong chance of at least reaching that pre-market low, I believe. All right. So that one covers that. Now we're going to go take a look at Dollar Tree, DLTR. Oh, Dick's crushed me yesterday. Honestly, I hate Dick's so bad. It took $1,000 from me yesterday. Without Dick's, I would have had like a $2,000 day, but it is what it is. All right, so Dollar Tree last time when it had earnings, it ended up being a really good short. The only thing I don't like about Dollar Tree right now is the fact that it's up. It's down too much. We haven't gotten a retracement yet pre-market on Dollar Tree. So this is a strong chance of what might happen, right? We'll probably see something like, if it stays in this pattern, right? If it stays like this, what we'll see is we'll probably see it either try to drop immediately, get bought right back up, squeeze, and then come back down, right? Or what it ends up doing is squeezing, just squeezing right out of the gates and then coming back down, right? So there's a lot of ifs that could happen with us. Again, what we like to see on an earnings gap down to short is we like to see this thing come down and then go back up pre-market so that it's like up here when the bell opens, and then we get in short for it to come down. But when they gap down and then they just go sideways like this, right? They always run a strong chance of dumping down like this and crashing if there's enough kind of momentum there. But if that doesn't happen, then usually one of two things happens, which is it'll break down briefly below the pre-market low, get bought right back up, and have a big short squeeze. Or it starts opening up, it fumbles around, and then it short squeezes to a resistance level, which this doesn't have any good resistance levels, and then it comes crashing down, right? That's usually what happens. So the reason we like to see a gap down come down and then kind of go back up is because at this point, when it's up here, it puts us to a good level where we could get short in anticipation we're going to hit pre-market lows. But when it's down like this, it makes me nervous to short down here because it's already come down so much. So now you're basically shorting the low, the same concept as buying the high. So trying to short down there at pre-market lows, you're really shorting the low, running the risk of a big short squeeze, and you don't want to get squeezed. So right now, there are no good pre-market levels to base a rejection on Dollar Tree. So what do we do then? If there's no good levels to map off pre-market for rejections as far as price points, what do we got to do? Well, we got to look at a different time frame here. So we're going to go into like a 20-day time frame probably. That might work for us. Yeah, this should do the trick. Let me do a, I got to go farther. I'm going to do a 90-day 1 hour time frame. Oh, no, I'll hold off on that for right now. So let's see, gaps down, right? So we're all the way down here. If it did spike up, that's a good level. So this $90 level is it theoretically is a good kind of resistance level to base an entry on, but I don't think that's going to hold up. If we break that, our next one is at 90.98. If we can get through that, our next level should be 91, and then if it goes all the way back up, the next strong level would be 93. Okay, so I will say this, be very careful trying to short Dollar Tree at this current level. The reason I would be very cautious of even trying to short Dollar Tree where it's at right now is because if you look at this 1 year day, no, it doesn't do the justice for me. Yes, it does, right? So look at this, right? You remember, the last earnings on Dollar Tree had a massive gap down. Okay, there's a big gap down on Dollar Tree quite a while back on its earnings play. So you can see here, this is the gap down. I'll highlight it in a box right here. This is the earnings play gap down. And that's where, so it gapped in after hours of pre-market trading, and that's what creates this spacing in the chart, right? Now look at what that did. So we had a gap down to there. It held resistance there. Going straight across, that's exactly where the price stopped at pre-market today. So let me do it a little differently. Let me put this on a 180-day time frame. And let me clear the drawings out, right? So again, this is where the gap was from here down, right? And then we held resistance here. If you go straight across, that's exactly where Dollar Tree is bouncing right now pre-market. On that gap down and that old resistance level, it's now holding a strong support. So trying to short it right now would be very risky because it's on a very strong support level, which could then run the risk of a big short squeeze out of the gates, which is what I was saying, to try to not short it initially. You know, it's too risky. Let's look for it to squeeze up first, hit one of these red dotted lines I now have on my charts, and that's where we'll look to get short for a rollover pattern. Okay. Let me hold on. Let's see. All right, so we're going to move forward. So that's Dollar Tree. So now we can move over to Dollar General, another dollar store stock. So looking at the one-day chart, Dollar General is lower on volume. It's a little choppy. So we're not going to spend too much time here. It's something to note. I'll be focused more on Dollar Tree. But Dollar General probably is still going to have some good moves. All right, so what we can see is it started here at a high of 108 or 109, dropped down to a low of 100. So what we want to know is, why did it go to 100? So let's take a look at our charts, and we'll probably come to find that's a support level. So let's look at a 180-day chart. Oh, it dropped down to 100, or yeah, like $100, 150-ish, yeah, 150. Okay, so why did it drop down to that level? Well, if you look here, here was a breakdown and there was a breakout at 100. Here was resistance at 100, resistance 100, resistance 100, resistance 100, 100, 100, 100. You go straight across and you're going to find that that's right at about where that support level is. So it makes sense that Dollar General is bouncing on that $100 level, okay? Going forward, like I said prior, we want to figure out, going back into this time frame, we want to figure out, you know, what's the resistance right here? Why is it not going higher than these levels, right? We want to figure out what's causing that issue there. So next thing we'll do is look at we'll look at a 180-day 4-hour chart. No, we just did that. I don't want to do that. I want to look at, we'll do a 90-day 1 hour. That's 71 minutes. Okay, so looking at this 90-day chart, we bounced up to about here. So that makes sense because this long wick we have here was resistance from these two spots. So we're going to draw a line right about there. So that's a clean resistance. And then there's really nothing left. I mean, it's possible. Yeah, I think. So we got one there at 102. Okay, so with that being said, Dollar General has a few support levels going down, but not a quite. Again, this is going to be one that's not as big a volume that you might want to stay away from, but this thing probably has room to drop to about $100 a day and maybe even a little below $100. We won't touch too much more on there. So let's shift gears over to GES. We got to speed this up a little bit. So GES. So this is a gap up. Last time it had a gap up, it ended up running like 3 points or something like that. Oh, excuse me. Ended up running pretty well. So this looks good. I know some people are like, well, this doesn't look very good. But remember, look at GES, right? So let me put it this way. Remember how we were talking about the gap downs, right, guys? Remember how we said gap downs? We want to see them drop and then go back up pre-market before we get short. We don't want to see the gap up right at the highs because then it runs the risk of pulling back out of the gates. So this is almost identical to Salesforce in the sense that it gapped up but came down. Now it's kind of coming to a support level, a buy point. So I would start thinking more long bias on GES out of the gates. Okay. Now let me put it into a perspective. Watch this. So remember how we're talking about the gap down and it goes down and we want it to come up? Well, let me flip the chart so that it looks like a gap down. Now look at it. Looks very similar to Dollar Tree, right? Where we said we want to see them gap down, hold a pre-market support, then go back up to start hitting some resistance and we can get short, right? But this is a long bias trade. I just made the chart backwards. So now let's go back and put it to its regular form, which is a long bias trade, obviously. Oops, excuse me. So that's what it looks like realistically, but I just maneuvered it, changed it so that it looked like a gap down. So this is almost the identical pattern setup to the CRM short, but this is just in a long bias trade, okay? So with GES, there's no guarantee it's going to be good, obviously, but what we're going to be looking for if we're going to trade GES is it's popped up, it held a double top, so pre-market resistance right at around 26. Now we're seeing it kind of roll over, drop down. We want to see this come down to about 24 or get relatively close. It doesn't have to go all the way to 24, but close would be good. And then, you know, even where it's at, it might start going. But now that we're down, right, this thing might pop right out of the gates and then run right into resistance at this pre-market high level. Might get lucky and even break that and keep going. But if you did long guess today, okay, and it ran all the way to the pre-market high, definitely look to sell at least half or 75% of your shares and then maybe hold a little bit, anticipating that we might go higher. All right. I think GES is also into a 52-week high, so there's no overhead resistance. Oh, there's resistance right at 26.15. It has a 52-week high at 26.15. So not only did we hit $26 pre-market today, but we also have a strong 52-week high resistance there at 26.15 as well. Okay. One second. All right, so that's GES. All right, let's move over back to, there's one more I'll talk about, which is ANF, and it'll be very brief. All right. So ANF is a gap down, right? We've covered gap downs already. You know, what are we looking for, right, guys? You tell me, right? I'm going to hold off here for a second. You tell me. What are we looking for in this gap down with Abercrombie and Fitch, right? What do we want to see? You guys tell me. I won't tell you this time. Nope, not wait till it drops. Anybody got the answer? Retrace. Yes, Andrew Padilla. We want to see it retrace up like it's doing. Go to a resistance. Find a confirmation. Right? We want to see it go up as far as pre-market right now, right? In terms of this particular play, right? Right? So yeah, we're looking, Lewis. Yeah, you guys are pretty close. You know, I need levels, spike short. So this is what it is. Yeah, spike short, pull up, hit resistance, come down. Exactly, right? Exactly. That's what we're looking for. We're looking for these gap downs to spike back up to a resistance and then give us a sell signal. Sell signals could come in the manner of candlesticks, level 2 readings, time and sales window, maybe a little bearish. That's really just about it. Maybe maybe hits a moving average. There we go. Things like that. So that's kind of what we're looking for, right? So I won't go over ANF really at all. I'll leave that one for you guys to mess with if you want to or trade it. But there you go. There is the pre-market stream for today. Anywho, so I hope you guys enjoyed the pre-market stream today. I do have to get back to our private group to get back into our live trading room, collaborate with all of our other members. So other than that, appreciate you guys for tuning in today. I will upload today's live trading video later this weekend. We will do a live stream because we did do a live stream kind of just talking about myself, how I got started, a few kind of helpful pointers for investing, some things to do with taxes. We covered a lot in that one stream, but I had some account information up on that stream that I didn't want up there on accident, so I had to delete that one. So we will be doing one this weekend. So just know that it'll probably be Saturday, maybe Sunday, haven't decided, but I will come on. We'll do maybe like an hour to an hour and a half live stream where you guys can talk to me. I can answer some more questions when we're not so time constrained in the morning. You can learn a little bit more about me. We can talk, basically anything. We'll talk about some taxes. We'll talk about maybe some 401ks, Roth IRAs, some things like that. We'll touch a little bit on some of those things as well. But it'll be more of an opportunity for you guys to get to know me a little bit better outside of just the pre-market watch list every single morning. So one of these days, Saturday, Sunday, we will hop on and do that. So if you guys want to tune in, that will be coming here this weekend. Okay. So other than that, guys, thank you guys once again for tuning in. I will see you all tomorrow morning. Yes, tomorrow morning will be Friday. I'll see you all tomorrow morning. Everybody, take care. Have a green day.